Hello, everyone, and welcome to today's episode of the Vancouver Life Real Estate Podcast and YouTube video. The Liberals maintained their power in our federal election. Trudeau is the man again for a few more years here. And of course, they did run on a platform that included a whole big focus on housing nationally here. So while they've got about a 20-point program, we're going to kind of dig in and dissect into the ones that we feel should have the most impact, at least on paper. Maybe we'll do a bit of an Instagram versus reality check on what we think is going to likely kind of pan out here with their campaign promises. So off the top, I think the biggest one that the biggest promise, if you will, was that they're going to build, preserve, or repair 1.4 million homes across Canada in the next 4 years. This is to help increase the supply side, right? This is the biggest sort of issue that we have in housing is there's just not enough supply. The problem with this promise, and I don't know if nobody just looked at their budget or what, but their budget for 1.4 million homes is $3 billion. Let's do that simple math. 3 billion divided by 1.4 million homes is $2,142 per home. What home are you building for $2,000 in Canada?
Or what are we missing?
Yeah, I've gone through this budget pretty closely here, and that just does not add up. I mean, it needs to be 100 times that size minimum.
Yeah, I don't. It's the cost of a pretty cheap couch.
Are they buying tents for people? Like, are these $2,000 tent houses? Like, I mean, not to be ridiculous here, but what in right mindset does anybody think $2,000 is going to help put a person in a home?
Yeah, I'm pretty sure. Back when Pierre Trudeau was in power, he initiated something like a $30 billion housing build, right? So this $3 billion for 1.4 million homes, again, unless I'm missing something here, I don't know how it computes, right? They actually go on to say that they're actually going to commit to the 2021 budget another $600 million to support the conversion of empty office and retail space into market-based housing. Okay, a couple things. I mean, I don't know if you've been in an office building lately, but you're going to get a condo with definitely no patio because they don't often exist in office buildings. Another thing is, okay, let's assume that of that 600 million, an average conversion for a 600 square foot space is going to be somewhere in and around $40,000 by the time you add in appliances, countertops, bathrooms, bedrooms, all that kind of stuff, right? And again, I'm just assuming a number here just to kind of give some rough calculation of what that $600 million conversions could mean. And it would be somewhere in the realm of about 15,000 condos. Okay. Again, over 4 years here, the promise was 1.4 million homes. So even if that went down to 20,000, you'd be at 30,000 condos. It still doesn't even come close to the promise that's being made. Where are those condos going? There's not a lot of, I'm sure, Dan, as you were probably looking through the budget much like I was, I didn't really see much how in any of this. It was a lot of what. And I don't know if too many people poked holes at it during the campaigns, right?
These are kind of bullet point suggestions or plans that they're trying to put in place here. And again, once you kind of dig a little deeper here, it just doesn't seem to be a fully thought out plan. And of course, the money just isn't adding up as to their allocation for each segment here. I mean, the kind of hearts are in the right place, right? We're talking about supply here. So that's something. It's a start. But again, we'll see what happens here in the next 4 years. But again, with these kind of budgets in place, do not expect anything significant to happen on the supply side.
Yeah, I don't really see change coming. Not anything of any substantial change anyhow.
Mm-hmm. And again, talking about having their hearts in the right place, they're creating something called the Housing Accelerator Fund. And this is to help fix the complex, backlogged, and under-resourced municipal zoning and permitting, is how they've worded it. And that's great, right? We've talked about this extensively, that the zoning and permitting issues are sort of the first and a major hurdle for building new homes. If it takes you 2 years to get a permit, it's difficult, it's challenging, and it does not help get homes built quicker. $4 billion will create 100,000 new homes. So, break down that budget. That's about $40,000 a home. This is, of course, I think, going to largely be money spent on people, right? On getting people into the zoning and permitting jobs that are obviously needed. Because if there's a backlog, throw more money at it, throw more people at it. Let's get that up to speed. But again, for reference, they're trying to build 100,000 new homes in 4 years. At the same time, they're on a growth rate of having 1.7 million new permanent residents over that same 4 years. So just on the permanent resident side, 1.7 million people and only 100,000 new homes. That's more math that to me does not add up. And that's excluding all just the natural population growth that's happening in the country.
Sure. I mean, I think, not 1.7 million of those permanent residents are all going to end up in middle-class homes. But even if it was, it doesn't really matter, because it's still such a low number by comparison to the people coming here, that you're looking at 17 people per home or some crazy math like that. Again, I don't suspect all these permanent residents to end up in middle-class homes, whatever those are. But again, that's 20,000 homes per year, right? We're still way off the mark. We need to be hundreds of thousands of homes per year, right? So I just, again, I'm with you, Dan, that the math doesn't really add up. And the how part of this, again, I don't see it anywhere, right? How is very important, and it's not talked about at all on the Liberal platform. So
how they're going to do it by banning foreign ownership. That's their next point, right? They're going to ban foreign buyers for 2 years. Okay. As we've touched on before, the last 12 months saw the highest rate of appreciation in home values in recorded history, in and around 20% per year last year, while at the same time, there was less than 0.5% of foreign buyers buying those homes. And then, of course, if you go even further back, that number only increases to around 2% nationally. So is that really where the blame is? I mean, I know they're trying, but
this angers me a little bit. And it's the reason the reason it angers me is because if you're a politician, the best enemy you can have is one that can't speak back, right? So by wagging your finger and pointing at foreign ownership as being this issue much bigger than it actually is, and nobody can come back and say that that's not the case, other than maybe people who are in the industry, but they're never consulted anyways. So I'm kind of at a loss as to how this is going to solve anything. In fact, I think it could further dampen and further hurt our ability to bring more housing supply to the market. I mean, when you think about it for a second, like you just said, we just saw the highest rate of appreciation and one of the craziest drops in supply that we've ever seen on record. And we have the borders largely closed, right? So this is domestic demand. This is domestic fiscal policy that has driven us to this place. It's not foreign owners, foreign buyers. They don't account for enough of the market to shift it. So I'm again, this is poor planning, and spinning it and saying that it's someone who can't talk back. I don't like it, and it doesn't add up.
I totally agree. And again, you look at the permanent residents fast tracked, right? They're trying to bring in more than ever and take basically people who were foreign and make them Canadians, and then they can buy without being banned. On top of the full 2-year minimum ban, funny note though, just before we go on, if you were a foreigner and you bought a home last year and you paid the 20% foreign buyer's tax, it's a wash at this point. Yeah, cost of doing business in a sense, and don't think we don't see it happening every now and then, but again, just to such a small degree.
Yeah.
So yeah, more taxes. Okay, so they're going to do a first ever national tax on non-resident, non-Canadian owners of vacant, underused land and, homes and vacant land. So, we already have it here largely in the Lower Mainland in British Columbia. Now it's going to be national tax. It's been in place here for a couple of years. I don't know how many new homes have been built thanks to this revenue from taxation. I don't think
Doesn't it just go into general revenue?
it does. That's the problem. Yeah. So
And there's no transparency. So,
yeah.
anyways,
Okay. Well, let's investigate their next policy here, and this is in regards to CMHC, Canadian Mortgage and Housing Corp. Right now, if you are buying a home with less than 20% down, you're paying the mortgage insurance, and so they're going to reduce the insurance amount by 25%, actually. So it's a significant amount of tax reduction for new buyers. And, this is going to save people around $6,000, they say, in that insurance. It's something. Homes are going up at the rate of, what is it, 15,000, 20,000 a month. But, saving 6,000, if it fits, it fits. And so, I think that will help some people.
What's going to completely negate that savings, though, is the fact that they've actually increased the insurance mortgage cutoff. So, going right now, it's at $1 million, right? So if you buy something over $1 million, you can't have an insured mortgage. They won't fund it. But now they're going to raise that to 1.25 million. It's going to raise it by $250,000. So they're going to loan you an additional $250,000, but you get to save 6,000. So think about how that works for a second and who gets to benefit from that. And then on top of that too, that's going to lead to a brand new price surge and a ton of people now being able to qualify for $250,000 more. That'll push those price points and competition and that price point through the roof.
Absolutely, it will, right? Keep in mind that you can now buy, or when this comes into effect, you can buy that $1.25 million home with a minimum of 5% down, as opposed to what it is today at 20% minimum down. So while a lot of people can qualify for these type of mortgages, maybe they don't have the down payment ready. So like Ryan touched on, there's going to be a huge surge between the 1 million and 125 price point, because people, as we know, when they qualify for mortgages, 85% of them spend at their absolute top. And if the top was 1.2-ish, but they only had 7, 8, 10% down, they could still only buy at $1 million. Now we've just opened up a whole new buyer pool to that price point. So it will surge for sure.
And that's also probably the vast majority of, at least in our supply in Vancouver, where I would argue it's probably the hottest part of the market too, right? So we're just fueling more of the hottest part of the market.
Well, keep in mind here, right? This is a perfect example of people sort of buying at their top, because the average home price in GVRD right now is $1,176,000. So if you kind of open up more people to be able to buy at and above that price point, they're going to.
They will.
It's that simple.
Yeah.
So they can qualify because credit is so inexpensive today. And again, the ceiling of their purchasing power has just increased by about $250,000.
Okay, so it's still hasn't gotten any better yet.
Yeah, next one's interesting. They are going to review the tax treatment for large corporations and owners of residential real estate, like REITs, like these corps that buy up buildings and rent them out to people that need housing, and then operate it as a business that people can invest in and get returns from. They're claiming somehow that these REITs are putting upward pressure on rents. Like, just because you own a bunch of buildings, that you now monopolize the whole rental market and you can just freely increase rents at your will.
Doesn't work like that.
Doesn't work like that. No, market rents are dictated by the market. If you have a building and you cannot fill it with people, you will lower the rent. So why they're trying to blame REITs for rental prices is just absurd to me, and it totally makes me angry.
Yeah, again, it's pointing the finger at more or less a blanket statement towards big corps and the money that they're making instead of the solutions that they provide, right? Like we live in a capital society. People have to make money here. That's how it works. So if you start telling everybody, you're making too much money, it's putting upward pressure on rents, and then not showing anybody that that's actually the case, I would be highly suspicious of whatever they're trying to do here. And as business owners and as people who invest, it turns me off. I'm a partner with a bunch of people who own some multi-unit units, and I can tell you that in the last 4 years, we had to drop our rents in order to get people in. Only now have we seen recent rent increases, and that's due, in fact, to the point that there's no vacancy. It's got nothing to do with excessive profits or whatever this means.
Yeah. So tax people who are providing rental housing. Okay, great. That again, you're decentivizing people that are literally providing housing for people that need to rent.
Biting the hand that feeds, right? Mm-hmm. So, and we'll get into that because there's a really interesting stat, Dan, that we talked about earlier about subsidized rental units and how many of them were investors and how much were actually owned by the government and why we need investors. But we'll get into that.
Sure. Okay. So moving along to in this sort of similar vein of investors and whatnot, they're pushing what they call rent to own program here. And essentially what a rent to own means is if a person who wants to buy a home, but they can't qualify for a mortgage today, but they feel like they can in the future, whether that's through obtaining PR, job improvements, any type of future changes that are going to happen. So an investor will buy that house for them. They will, the new owner will put in a bit of a down payment, and generally they pay well above market rents so that it entices the investor to actually do this for them, right? They're putting themselves out to help out this new and future homeowner. The rent-to-own program they're pushing says the exact opposite. The landlord must commit to renting a lower than market rate. Okay.
How?
Yeah, I mean, I think they're committing $1 billion in loans and grants to develop and scale this project with private partners. Yes, also non-for-profit and co-op partners, but private. So they're saying, okay, we're gonna tax all these investors for making too much money, but then we're gonna loan them a bunch back so they can, provide more housing. It's like the right is not talking to the left here. It's just absurdity to me.
Or they're gonna do maybe what they've always done and say, hey, look, we're gonna lower rents. It's gonna be lower than market rents, right? Then we're gonna give you however many, tens of millions in loans, which you eventually got to pay back, right? Or grants. Let's hope it's grants. But in order to pay for those grants, they're going to tax you and me and everybody else a little bit more so they can pay for that. So ultimately, this doesn't change anything. This just is taking money from a different place and redistributing it in another way. Again, it doesn't add up. There's no innovation here. And the problem with rent to own programs is that they work in flat markets. They don't work in appreciating markets. When you have an appreciative market, the investor is going to play to that market. Why wouldn't they? Look at last year. It went up by 20%. So if in 5 years, right, I get to sell my rent to own property to you and I can make maybe 11 or 12%, right? Because you're going to pay, although somehow you're paying below market rent. So I'm not quite sure where that difference is coming from. But anyhow, normally you pay an above market rent, and part of that above market rent goes towards a down payment. So you can contribute that portion to the down payment to buy the home in 5 years. And you agree in year one of what that purchase price is going to be 5 years from now. However, why would anyone agree to that when in the last 1 year it went up by 20%? And based on everything we're seeing here, it's not going to change too much. So if you're going to tell me we got to agree to a home price that's going to be 40% higher in 5 years, no one's going to buy into that on the rent side either, right? So again, it works in a flat market. It works in somewhere like Edmonton, or it works in somewhere like Calgary where prices have been flat for 5 years. Okay. But it doesn't work in a market where Vancouver or Toronto or Montreal, where we see huge appreciation values. that's for investors are much smarter than that, and they won't entertain this. That's just my piece on it.
Agreed. So let's have a little look here at the Home Buyers Bill of Rights. About 8 or 10 points here. Let's talk about the ones that we think will affect people the most. Starting with the banning of blind bidding. This essentially means that people will know if a property is receiving multiple offers, what the other offers are. So you kind of have, if you are going to offer on it, you may get into a home at 5 or 10,000 more than the next bid, as opposed to 50, 60 or higher. We've definitely seen that happen, right? We've sold homes where there was one offer that was significantly higher than all the rest, and that offer generally wins it. How much this will affect the overall pricing of homes? I think there'll be a bit. There will, because if you have people that are not overpaying, if you will, there'll be a few properties that are just going to go for a bit less. On the other side, we've also seen auction environments where things get extra heated, and because things are so close, people squeeze themselves up and up and up and up. And sometimes we've seen this in other countries, like Australia, for example. The end result can sometimes be at or even higher than it would have been if it was blind. So while it's not a total solution, I think it will be well received, and I think it is going to add a little bit more transparency, and at least people will know a little bit more and feel more confident in the process.
Yeah, I don't know if it's going to stop people from necessarily spending 200 grand over the list price. I mean, at the end of the day, an asset in a marketplace has a value, right? People do get emotional, absolutely, when it comes to homes. So I do think that it will help curb maybe those emotional buys. But again, is this really going to change the overall supply demand economics that we're dealing with that are really creating the upward pressure on price? No. I think it'll make people feel better at night, and that's great. And I'm all for that. Again, maybe how would be great. How are we going to, ensure that blind bidding isn't done? How are we going to ensure transparency? I'd like to see that too, right?
Mm-hmm. Next one here is establishing a legal right to a home inspection. Okay, that's an interesting one. Yes, everybody should get an inspection if it makes sense for the home that they are buying. We're totally for that, and we certainly advise accordingly. My question, I guess, is, let's say we're in a hot market like we are now, and the home is holding offers like most do now, and it's on the market for 1 week before they look at offers. Okay, great. People do pre-inspections all the time already. But Mr. Buyer comes in on the Sunday before the Monday offer date, says, oh, I like it. I want an inspection done. My inspector is available next week on Friday. He can't come in by tomorrow when you guys are taking offers. Where is the legal right? What happens there is what I want to understand mostly. Is the seller now going to be sued because Buddy's inspector can't come for 4 days after he wants to take offers? I don't quite know how that pans out.
And the difficulty there is with inspections, at least the way it currently works, is that the inspectors work for the home buyers. They don't work for the seller, right? So yes, you could have a pre-inspection done on the home that's available to all the buyers, I suppose. But at the end of the day, that home inspector is working for the seller. That's the person who's paying for it. So the interest, there's a conflict of interest to begin with, depending on the credibility of the person who did it and the company and all of that. That's often why buyers like to have their own inspection done so that they can be told exactly what's actually happening. So yeah, Dan, to your point, it's again another how question. Great idea. I love the idea of protecting people. But again, if I'm buying a 2-year-old home and it's currently under warranty, you want an inspection, but I don't. At what point does the seller then say, well, I'm going to take the offer that wants to go right now. I don't want to wait a week and a half, but that guy's got a right to it. It starts to get really confusing.
Mm-hmm. Yeah. Idea, but not a fully thought out plan per se. Mm-hmm. Ensuring total transparency on the history of recent sale prices on title searches. Okay. History of recent sale prices can be found on a lot of places, including bcassessment.com. I guess they're just trying to put it on a title search instead. So it's just in a different place, maybe a little bit easier to get. Sure. No problem with that. I think it may help. Again, the data's already there, but I guess it sounds like they're making it even more transparent.
Yeah. I again, doesn't really change much.
Yeah.
Market value of a asset, whether I paid $5 for it and it's worth 15, it's irrelevant to whatever the sale price in the market is.
Mm-hmm. And another one that we found quite humorous is requiring real estate agents to disclose to all participants in a transaction when they are involved in both sides of the potential sale. That already exists. That's been in existence for years. I don't know if they just didn't, again, talk to somebody in the real estate industry before they brought this up. But again, that requirement and the disclosure has been in place for a number of years here already. So,
and we're actually, just side note, like in Vancouver, we're not even allowed to. Right. The only time it can actually take place is if there's not enough realtors in one area, or if for whatever reason both sides agree to not being represented. Right. But again, it's just, I don't know. It's not going to change anything.
Yeah. Okay, so now let's talk about these evil flippers, these people that make money turning, old uninhabitable homes into nice rental properties. Ooh, evil.
Or selling them afterwards.
Yeah, because some people just do not have the wherewithal or desire or time or money to do a flip or fix a property. But other people do, and now we're punishing them for making homes better for renters or end users.
Mm-hmm.
There's going to be a tax on it, which we couldn't find any dollar figure or percentage amounts attached to this. Or they're requiring people to hold properties for 12 months before they can be resold. So again, you're taking people that are improving houses for end users or renters and punishing them.
Yeah,
so that market is going to disappear.
And taking on risk of their own. There's no risk to there's no risk to the government here. But somehow they get the tax on it. It's unfair. It's going to slow down any kind of investment. I mean, you got to think about all these people that like to flip homes. They do it for a living. They do it as a side hustle. They do it because
they pay taxes on their profits.
Yeah. Where do you think they're going to go? They're going to go and do this in a market that doesn't do an anti-flipping tax. And the reason for it is because other marketplaces in the world would like to see their housing stock improve. I mean, the vast majority of homes in Vancouver, East Van and Vancouver East and Vancouver West are like between 60 and 100 years old. So what are we going to do instead? Instead of flipping them, we're just going to bulldoze and build really expensive brand new ones and charge GST.
It's frustrating. Anyways. So let's end on this. The whole sort of MO of these housing policies from the Liberal government is to protect your rights. Right? It's quoted here as the desirability of Canadian homes is attracting profiteers, wealthy corporations, and foreign investors. This is leading to a real problem of underused and vacant housing, rampant speculation, and skyrocketing prices. Homes are for people, not investors. Okay, that's their quote. And of course, as we touched on a little bit earlier in this, they are incentivizing some investors, with grants and loans and other ways because they need help with the housing here. And as a good reference here, I pulled up some data from the year 2000. So it's outdated, but of course, I think on a percentage basis, we're in a pretty similar position today. In that year, there were approximately 550,000 subsidized rental units across the country, right? These are government housing. This is housing rentals provided by our government. That housed about 1.5 million people. At the same time, there was about 25 million Canadians across the country. 7.8 of them were in rental units, okay? 6 million... let's back up here. So 7.8 million Canadians rented were in rental homes that year. 1.5 of those were in government homes. That leaves a remaining 6 million people that were being housed in rental units provided by investors, right? By these evil dark lord investors. That's 76% of people that are renting are living in homes that are provided by, your people like myself that have a few rental condos that we rent out to people that need housing. And this policies, they're basically punishing these people that are providing housing. So,
but at the same time, the government's going to take all the rentals.
Yeah. Like how much more can you squeeze housing providers before they're just going to be like, no, okay, I'm not interested. I'm going to invest my capital elsewhere. And, based on all the numbers we've gone through, there's no way the government's going to catch up and suddenly provide, these 6 million homes that are required or whatever the number is today. It's just so extreme. The gap is so big that they're just never going to be able to catch up should the private investors decide to walk away because they're just being punished for giving housing to people.
Yeah, it's it doesn't add up. Not much of this really does. And again, I don't know why, when you look at their quote there, the desirability of Canadian homes is attracting profiteers, wealthy corps, and foreign investors. And it has nothing to do with the fact that you put interest rates at damn near bottom levels, created a fundamental supply issue so that demand is so high that it's pushing up prices. But it's attracting all these other people. The root cause is poor planning. The root cause is decades of undersupply, and then fiscal monetary policy, which has to have an impact on housing. They shouldn't be separated. Yeah.
And do you notice the absence of just that? There's no mention of it. It's all this says is it's everybody else's fault. Yeah. Everybody. It's investors, it's REITs, it's foreigners.
Yeah.
It's flippers. It's not the government's fault. They had no hand in increasing property prices 20% last year.
Yeah.
None. Cool.
Anyways,
so that was a real positive one.
I was going to say, normally we have a bit more fun, but I think the government is feeling out of touch with what's going on. Again, I'm not convinced the result of the election is going to change anything. I think we're just going to see a lot more of the same. Be really, really surprised. I don't think Trudeau did much on his last housing policy. So even though these are all written down, I don't, again, there's no how for any of this. So until we know how this takes place, I'm not sure if any of it's actually going to take place. I mean, some of it might for votes, political reasons, but to actually change the status quo, I don't see it.
Mm-hmm. Same. I think even if all of these were actually implemented and achieved, there's still a housing crisis.
Especially the $3 billion for 1.4 million homes.
Yeah.
The $2,000 for a home.
Okay, well, earmark this episode. Check back at the next election. Let's see where it stands. All right, thanks. As always, for watching and listening. Please, if you're getting some value out of this, please do subscribe and join our channels. Thank you, and see you next time.